Welcome to Markets Now. I'm Michelle Rourke with Chip Nellinger, Blue Reef Agri-Marketing. A mixed close in both grain and livestock futures trade. But Chip, let's start off talking about corn. We did end at the plus side there. Some of it was the friendly quarterly stocks number that we got, 1.76 billion bushels. How friendly was that number? Because I think it was record usage, wasn't it?
Yeah, I think it was record usage, and the big thing was we had understated feed demand by better than 100 million bushels. So, at face value, it was friendly. I don't think it was wildly bullish. I think it added a little bit of fuel to the fire because the funds were in buy mode at the end of the month, into the quarter here. So I think this report, if anything, just kind of added a little bit of juice and momentum to the upside. Certainly friendly. I don't think it was a game changer or wildly bullish, but it certainly helped the cause at the end of the quarter with the fund buying.
We could not close, though, above that 425, 426 level on the December contract. How important is that level, and why couldn't we close above it?
Yeah, I think it's important. First of all, that 425 to 427 area versus the December is achieving some upside targets, some retracement levels there. You're also seeing an increase in farmer selling. So as the funds have been buying this, they've rallied it far enough to get the farmer enticed to making some new crop sales. And so you're seeing some back and forth now, some selling pressure into this rally from the funds. And so you hit some technical upside targets. I think if we can close above 4.25, which we're kind of right on the fence right there, if you can close above 4.25, it may kind of add some fuel for some additional fund short covering in the first few trading sessions of the new quarter.
Soybeans, we ended lower there after what was pretty much a neutral report, 342 million bushel quarterly stocks. So were we trading Brazilian weather? What was going on there today?
Yeah, I think it was all Brazilian weather. I mean, that stocks report really didn't give much for the bulls or the bears, pretty much in line with expectations. Did see a trend towards some of the best chances for rain in those dry northern Brazil areas that we've seen really for a couple of months. Now, that's not until like midweek next week. And so somewhere in that 7th, 8th, 9th range of October. And so that forecast can and will change probably several times between now and then. But I think the market was unable to kind of follow through to the upside like the corn and the wheat market was able to because of that better rain chance down there for Brazil.
So let's run the scenario. If you don't have those rains materialize, how high could you go? And conversely, if we get rains, how much weather premium do you take out of the soybean market?
Yeah, that's the question. I think if they don't see those rains, you could very quickly take November beans back to 11 to 11.25. I think the funds would use that to get out of all remaining shorts and maybe even get a little bit net long in beans. If they start getting more regular rains, and that's the trend, and their planting pace catches up quickly, we could see a quick 60, 80 cents taken back out of the bean market. I think it's really at the end of the day more about what the weather has been. And so you're going to see some potential volatility in here. Like the corn market, I think you've increased some farmer selling, and the higher you go, especially we would see $11 November or higher, I think you're only going to increase the farmer selling at that stage as well.
You should be selling at those levels, I would think. I mean, these are levels that we didn't think we were going to see, right?
Yeah, absolutely. And, I think many producers we talk to, especially in Illinois, seeing far better corn and bean yields than what they expected. They're really, really blessed in Illinois, in some areas of Iowa and other parts of the Midwest with really strong yields. And so when you take into account this rally that we've seen, it's really pushed producers back into a profitability standpoint that they really need to be taking a close look at.
I also have to ask you, China has thrown all this stimulus money at their economy. Their stock market really likes it. Obviously, there's thoughts that that's going to translate into demand. But are we betting on the come there in this bean market?
We might be. I mean, China's been a better buyer. I believe this morning we announced another flash sale to China of U.S. beans. So they've been a good buyer in here. They need to be because they're still behind the pace that we need to see them at in order, to hit some of these export numbers that the USDA has pegged for us. So yeah, it hasn't hurt the rally thus far. It's probably added some fuel to the fund buying, but so far we haven't really seen that big move in their internal demand there. Their grain prices have stayed pretty steady since they released those fiscal measures and monetary easing last week.
Yeah. Talk technicals with me on soybeans, because I think we're still above the 50-day moving average, but we certainly didn't get above the 100 days. So what are you watching?
Yeah, again, I think the key is going to be it's hard to kind of predict this because it is probably 80% about the weather in Brazil. So
Okay.
that's gonna trump us in the short run. But to me, I think it's going to be important to watch the first 2 or 3 trading sessions of October. Typically, if we're going to continue to the upside, that's when the funds are going to keep buying this thing and come out of the remaining short. So to me, it's not so much about price or any particular target. It's about what's the action come the 1st and 2nd of October, and are the funds going to be there on the long side? If they are, I think we'll quickly be at $11. If they're not, and the rain chances increase, we may have seen a temporary top for the time being if that planning pace can kind of advance pretty quickly into the end of October down in Brazil.
They have gotten out of the funds, that is, out of a lot of their short position in all of the grains, though, haven't they?
Yeah, they have. They're very quietly. Again, I think the rally has been met with some light farmer selling on the way up, and that's maybe muted the effect a little bit of this buying. But yeah, I think as of the close here at the end of the quarter, end of October, they've probably come out of probably nearly 200,000 or more corn contracts. And certainly about probably not quite the same 150, 130 to 150,000 contracts of beans, and 20 to 30,000 on the wheat. So they've done some major buying over the last 2 to 3 weeks in here.
Speaking of wheat, let's talk about quarterly stocks. There came in at 1.99 billion bushels, so maybe a little bit above expectations, but not a lot. Production, 1.97 billion bushels. But I got to ask you, do you think maybe the market was fearing that we could see a little bit larger production number or not?
Well, maybe a little bit. I mean, that seems to have been the trend for the last couple of years as you just continue to see more and more stocks of wheat. So it was a touch above the average estimate, but I don't think it was outside of too far outside of the realm of expectations to really move us. Again, I think we got the benefit of a lot of end of month, end of quarter fund buying in here. The wheat market on the chart looks really strong. We haven't violated any, support to the downside, but we also, in the same breath, haven't seen a lot of follow through to the upside. So I think the first 2 or 3 trading sessions of October, I don't want to overstate it too much, but I think it's really important for the direction of these markets going into, deeper into October.
Do you think any of today's rally was weather premium? Do we need to be putting weather premium in?
Well, I think the market, in the case of wheat, is watching Russia and Ukraine. They've had some very dry weather over there, very similar to Brazilian bean farmers. They've kind of slowed down their planting pace, and so that, I think, at the end of the day, is something the market's going to watch. But it's really hard to get good, accurate information, especially out of Russia. But it's certainly something there. I mean, the world stocks of wheat have been shrinking slowly. I think one thing the wheat market's been waiting on too is an increase in world wheat prices. We haven't seen that yet. They've been pretty stable, but I think the first sign you see of Russian wheat prices rallying, it really could be explosive in the case of wheat.
No doubt. Okay, cattle. Feeder cattle lower with the higher corn, but live cattle futures actually made new high closes for the move. Do the funds keep pushing this, and especially if we keep having higher cash trade?
Yeah, certainly the cash has helped, right? The last 2 or 3 weeks, the cash market's certainly given us some direction to the upside here. But the funds, again, have been nice buyers. I think they're long just north of 50,000 contracts now. Probably bought some additional today. And again, like the grain markets, the first 2 or 3 trading sessions of the new quarter, I think, going to be important. History would tell you that typically they're going to follow through and keep buying and getting long the cattle market in here. So if the cash can hold together, that could mean a little more upside. But in the same breath, we're starting to achieve some upside targets in the live cattle. And I think to get up closer to 190, it's going to take a big move in the cash market to get us there.
Right. Charts look pretty good in live cattle, and even feeders with the pullback today still look very good, don't they?
Yeah, they do. Again, I think responding to that higher corn trade today. But if live cattle can continue, it's going to spill over and add some buying interest on the breaks in the feeder cattle as well.
And what about the hogs? We ended mixed here today. We digested the hogs and pigs report on Friday, obviously, but where do we go now? Because the funds have gotten pretty long in that market, over 50,000 contracts, but the cash market is starting to soften. So where do we go?
Yeah, maybe unfortunately more slop. Fourth quarter typically isn't a real good time frame for the hog market. As you mentioned, hogs and pigs didn't give us anything really bullish. Showed maybe some bearishness at the very front end of the market. So I
Right.
think unfortunately we could slop a little bit. We've had some runs higher here that was maybe a little bit counter seasonal. So I think it would take a lot of fun buying to keep the ball rolling deep into the fourth quarter here. I think the best can be said is maybe sloppy sideways trade in the hogs to expect for maybe the next couple of months in here.
All right. Thanks so much. Chip Nellinger, Blue Reef Agri-Marketing. That is Markets Now.